Hey everyone! Today we'll see what happens if we invest $1 versus investing $1 billion and the power of compounding interest. Before we get started, a quick disclaimer. This is not investment advice. Every case is different, and we are not licensed financial professionals. $1 invested over 10 years with a 5% interest rate would grow by 50 cents, leaving you with $1.50, barely enough for a cheap snack. Meanwhile, $1 billion under the same conditions grows by $500 million, totaling $1.5 billion, enough to buy a fleet of private jets. Both situations seem to grow at a steady 5% rate year over year, not too surprising. But compounding interest changes everything. Instead of just earning interest on the original amount, compounding reinvests each year's earnings, allowing money to grow exponentially rather than linearly. Using the same 5% rate, but compounded annually, $1 grows to about $1.63, not much of an upgrade. However, $1 billion turns into approximately $1.63 billion, creating an extra $630 million out of thin air. Small investments see minimal change, and large amounts snowball into enormous wealth over time, making compound interest one of the most powerful forces in finance. This principle explains why long-term investments in stocks like the S&P 500, real estate, or retirement funds are so effective. $1 invested in the S&P 500 in January 2015 would have grown to about $3 today, while $1 billion would have grown to $3 billion. Over longer periods, this effect becomes even more pronounced, leading to massive wealth over time. It also reveals why the rich keep getting richer. The more money you have to invest, the more compounding works in your favor, turning even modest returns into enormous fortunes with enough time.